Hello and welcome to today's Crypto and Blockchain Economics Research Forum webinar. My name is Evgeny Lyandres. I'll be the moderator for today's session, and the session is going to feature two exciting projects in the area of audits of DeFi protocols. So we're all aware that DeFi is not going through the brightest phase right now. TVLs are down 70-75% from the peak a year and a half ago. The overall activity in DeFi as well. And part of the reason may be the real or perceived risks of transacting in DeFi. And that is what makes the topic of today's webinar, which is DeFi audits, extremely timely. As I mentioned, today's symposium is going to feature two very exciting papers. The first one that is called DeFi Insurance, Audit Adoption, and Capital Market Effects is going to be presented by Thomas Bourveau from Columbia University. And the second one that's called Auditing DeFi Protocols is going to be presented by Daniel Rabetti, who recently joined the National University of Singapore. So before we start, a little bit of logistics about today's session. The chat feature is disabled, but the Q&A box is enabled for the audience. So the audience is encouraged to write the questions in the Q&A box. The speakers might choose to answer those questions during the course of their talk or at the end of it. That's up to them. I'm going to monitor the Q&A as well, and if there is any important clarifying question, then I may choose on occasion to interrupt the speaker and ask the question. Timing-wise, each paper is going to have, or each presenter is going to have 40 minutes approximately. 30 minutes for presentation and about 10 minutes for questions, give or take. And that is also going to leave us about 10 minutes at the end for potentially more discussions and questions to both presenters. And at this point, you'll be able to raise your hand. The voice feature is going to be enabled, and you'll be able to ask your question yourself, or if you prefer, I can read your question from the Q&A. All right. So at this point, I'd like to sort of pass the microphone, so to speak, to Thomas from Columbia. The stage is yours for the next 40 minutes.
Thanks a lot, Evgeny. So first, thanks, Fahad, for putting together the session, inviting Daniel and me to present. And thanks, Evgeny, for being the moderator and for pronouncing my last name like close to perfection. So this is rare enough to be mentioned. All right, so let me share my screen. Okay, can you see my screen? All right, so this is a joint work with Yanya, who's at Chinese U, and Jordan, who's at the University of Utah. And the three of us are actually not finance faculty, we're accounting faculty. And we're coming on this with more like a traditional audit perspective. So we've done some work on traditional financial auditing in capital markets, and we were interested in understanding what kind of trust mechanism exists in other type of markets. Here the decentralized finance market. And if I want to start with something, maybe super big picture that is not hardcore DeFi, but more about auditing in general, right? If you think about auditing, it's a practice that provides assurance services for two or more, but at least two contracting parties. So if we step out of capital market, you can think of, you want to buy a house and you're going to get a surveyor to survey the house to make sure that there is no hidden issues, right? Because there's some information asymmetry between the buyer and the seller. Well, in capital markets, the same information asymmetry led to the emergence of financial audits as a voluntary contractual mechanisms between market participants due to changing economic conditions. So if you go back into the Rajan and Zingales paper, for instance, we know that at the turn of the 20th century, like firm grew a lot and ownership became dispersed. So firm raised more capital from more investors, and smaller investors entered the market as well. You have this information asymmetry. One solution is for the manager to share information about what the firm is doing and how well the firm is doing. So think about like reporting profitability. But of course, you also need the information to be credible or truthful. And for that, you need some credibility mechanism. And that's how auditing became widespread. So in the United States, where I know the regulation or the regulatory landscape the most, audit became mandated for public firms in 1934. But right before 1934, like almost 90% of the market had their by market cap or by number of firms had their financial statements voluntarily audited, right? So this was seen as a way to reduce information asymmetry, or if we don't take like economics, like build trust. So now today we're experiencing different type of changing economic conditions through like technological or environmental or social changes, and now stakeholders, so investors and other stakeholders, they want information about ventures, but not just on their profitability, right? They also want information about their carbon emission, about how well or how safe you store the data of your customers, or how safe is the technology that is built on the blockchain, like which is the purpose of the webinar for both our papers today. So there is a need for non-financial information, but just as we had in a century ago, the same needs for this information to be credible. And in this paper with my co-author, we focus on the emergence of auditing for smart contracts. So this is a new phenomenon. It's a couple years old. So this is we have a very descriptive ambition, right? We have no identification strategy, nothing. We're really trying to paint the landscape of what this market looks like. And to do that, we kind of have three objectives in this paper, which is still very preliminary. We try to understand who provides smart contract audits, understand what services are provided, and whether there is some value attached to it. Okay, so the good news, if you presented the CBR webinar, is that I don't really have to go through what is DeFi. We know it's financial applications built on blockchain technology. Said the market went up a lot in 2022. When it's down now, but we can trust that regardless of the market cap of the sector right now, the technology is here to stay. And of course, the main difference is in the world decentralized, so you don't have banks or clearing houses, but instead, DeFi applications are built on open source protocols that are powered by smart contracts, which is the topic that we're interested in to look at their audits. I clearly don't need these slides. Okay, so this one is important. So of course, you all know here what smart contracts here. When I present outside of a fintech audience, I say it's like the vending machine. You press 31 and then you get the candy bar. This is a smart contract. Here it's kind of like the same in more complex. It's tied on a blockchain, and it executes itself with some predetermined conditions and parameters without having third parties. But this is, I think, to me, this is the most important part, probably, to motivate conceptually the use of auditing. Right? Is that the difference between like if you go and use and invest money using financial products on the blockchain, so through a DeFi application, everything is set ex ante, right? There is no ex post recourse to solve a dispute. If tomorrow you invest through a broker and your broker happens to be a crook, you can go and use the courts. You can sue. You may or may not win. You may or may not recover your money, but there are some legal actions you can undertake to kind of try to get back a claim or a loss that you suffered for, for unfair reasons. And the fact that everything that exposed, there is no way, because it's anonymous, transparent, and everything is preset ex ante, you cannot change the transactions exposed. It makes ex ante information asymmetry even more important to reduce, right? Because to some extent, if you have perfect ways to correct errors exposed at, like, let's say, very, very limited cost, ex ante information asymmetry matters less. Here, all the focus has to be on that because there is no option to take actions exposed. So as a potential users of a DeFi application to, for lending or for trading digital assets and so on, you really care about minimizing this information asymmetry ex ante. Okay, so this is an example of a smart contract. You clearly don't need to do that. And of course, the fact that there are risks associated with blockchain technology has, raised concerns by regulators. So Commissioner Crenshaw talked about the lack of protection a couple of years ago. And in practice, you have two main type of risk, right? I put risk twice, but that's a mistake. You can have like honest errors in the code, like you program, just like when we code, we can make an error, but the consequence is that the funds are transferred to the wrong account and you lose your assets. Or they can be exploited, so attacks from third parties who are trying to exploit vulnerabilities in your underlying technology to come in and steal your funds. And this is not rare, right? Like, I just pulled up a tweet. I don't know how you call it now, an X, maybe, I don't know. From an attack that took place earlier this year that led to a loss of like 3 $3 million. So third party come in, use the vulnerability as an entry point in the code, reroute the funds in your wallet, and you lose everything. So this has led to recommendations by both public and private actors to be like, okay, if you're going to use blockchain technologies for financial products, make sure that those have been audited by independent third parties to make sure that they are trustworthy and safe. So one example I have here is like the FBI. So the FBI is saying, okay, like most of the crypto theft last year were on DeFi platforms. So if you're going to use DeFi platforms, please, make sure the projects are independently audited about their code, so that the technology is checked. So that's important. So I came here from having worked on the emergence of financial audits from a historical perspective, like looking at like data in the early 20th century. And if you think about this, there are similarities and differences between DeFi audits and traditional financial audits of firms, both public and private. So in terms of similarities, both have an objective to build trust or reduce information asymmetry. If you're in the US, like there is no audit mandate for private firms. In most countries around the world, there is an audit mandate by securities regulation if you are a public firm. In both cases, the output is typically like an audit opinion. Although for public firms, it's typically very short at the end of the financial statements. If you read the firm's 10Ks, like a page or two max. Whereas here we have, some reports are very long and detailed. In terms of target audience, both have an external audience. So both of them aim at like consumers, trade creditors, for public firms, or of course investors or lenders. In the case of DeFi audit, some of the firms also provide advice on how to improve your technology, and then give you recommendations. So there's also an internal decision making aspect to it. Firms are paying the audit fees, and in both cases, there's always a limited liability or some big disclaimers that even despite the audit is not a guarantee that nothing can go wrong. So here I pulled an example of a disclaimer from Certic, one of the main auditor in the space, and highlighted, like they do not provide any warranty or guarantee that even after their audit, and they highlights that everything has been sorted, and that risk is risk is never zero, and you cannot hold them liable for that. In terms of differences, of course, the basis of opinion is very different, because here, if you think of like a public firm getting their financial statements audited, they get the entire financial statements audited. They cannot pick and choose. Whereas here, in DeFi, you don't look at an output of the firm business. You look at the underlying technology, right? So to some extent, you can think of this as like the financial statements audit tells you how good is the match between the representation of the firm and the actual, realization of the business. Like, you have some transactions, there's an economics, and how well does the accounting represent the economics of the firm. Whereas here, it's more thinking about the input, like how good is the technology that then allows you to do business. In terms of who performs those audits, there's no qualification, right? For financial markets, this is a licensing profession, right? You have to be registered, you have to pass an exam, and so on. This is not the case for smart contract audits, at least so far. So far, there's no widely accepted audit standards, like very few. And while in most countries, a company that audits a firm's financial statements cannot do consulting with the firm. This is why some of the audit firms are considering doing like a split. Here, in some cases, you provide pure assurance, and in some cases, it's assurance plus, advising or consulting with the firm on, hey, we found those weaknesses in your code, and this is how we would recommend that you address it, which would reduce the risk of vulnerabilities for errors or outside attacks. Okay, so in terms of data, we were lucky to get data from DeFi Yield in 2022. In this version of the paper, we have about 5,000 reports from 2017 to mid-2022. We've been increasing it. We've been updating the paper, and we're increasing the sample size. So watch out for a new version soon. We get some market data from CoinGecko, and we use DeFi Llama to get some ventures data from this crowd. You all know this information. So right now, again, because the market is very cyclical, most of the reports we got come from 2021, like the vast majority. Okay, so back to our research objective. So first, we want to understand who provide smart contract audits. And this is actually not like, of course, this is going to be more of interest for accounting faculty than, let's say, finance or economics. But I think it's interesting from our perspective to understand who is going to provide the service, because if you think about it, there's been demand for new assurance services across multiple dimensions, right? Like carbon emission, cloud data, et cetera, et cetera. And there is competition in this market as to who is going to provide those new assurance services. And if you think about like the traditional financial markets, it's dominated by a few players, like 3, 4, 5 players, depending on the country. It's a very oligopolistic market. But what's interesting here is that on all those dimensions, you have some competition between traditional financial audit firms and new companies. And typically what you have is the audit firms, they come with the knowledge of process. They know how to set up a process to audit something. Whereas the new companies, they are coming with the skills, or the, let's say, the IT skills or the computer science skills to understand how blockchain works, which is typically not something. This is not knowledge that has been developed widely in, like, let's say, Ernst & Young or PwC, et cetera, et cetera. So there's a really cool paper if you're interested in like audits in new markets by Bauer et al., like from Canada, and they're looking at all the new areas. They found 33 areas. And they look at, okay, they put themselves in the shoes of a hypothetical traditional financial audit firms, and they're like, can we expand our service to that new area? One of those 33 areas is smart contract audit. And every time they ask us, okay, does the subject matter relate to financial information or controls? Yes or no? If it's yes, it's going to help traditional firms enter in that market. And are there some criteria available to evaluate the subject matter? So do you have like clear standards or ways to be relatively objective so you can scale your work? And they categorize each categories as like likely, unlikely, or uncertain, and they do some benchmark, which is really cool, with like looking at real world firm presence and some panel of experts. And what's interesting for us, that they classify smart contract audit as like uncertain. Let's say it's because of the lack of criteria available to systematically evaluate the smart contracts in the same way across all the portfolio of potential engagement that you can have with different DeFi ventures. They say it's unclear that this is an area where existing firms can enter. So this is one of the first things that we look at, and we're interested in seeing, okay, we have like this 5,000 audit reports. We know who the auditor is. Let's check which one are technical and which ones are what I call technical, or which one are like traditional financial auditors. Then we'll look at some examples and the market structures. But basically, so those are like the largest 91 in our sample. And as you can see, so organized by alphabetical order, not by market share here. And as you can see, you don't see any names of large financial audit firms. Of course, it could be a very small one, so we check them one by one, and all of them are like what we call technical firms. So they're typically started by computer scientists or let's call it IT specialist, or blockchain or cloud specialist. So one example is Certic, which is one of the largest player in the in that space. It was founded by engineering and computer science professors from Columbia and Yale, along with some former employees of Google and Facebook. Like on the web page of the firm, their employees are all graduates from technological related fields, so typically from computer science. So they're a generalist firm in the sense that they provide multiple services. So they say that they've served over like close to 4,000 services. So as you can see here, it's a screenshot of their product suite page. Smart contract security assessment is just one of the service they offer. They do KYC. They do like penetration testing and so on and so forth. So they do different things, but they are like a technical a technical firm. They do describe a bit their audit process on their webpage in terms of like the scope of the code, looking for specific coding errors or general vulnerabilities that they know to be common in the market. So now, if you look at the distribution, it's very skewed. So TechRate is one auditor, and it has like 30% of the market share, and then you have like 10 following auditors that have like above 100 engagement during a sample period. So TechRate is like more like a pure assurance provider. So they don't do advisories. If you look at their reports, they don't provide any advice on, oh, this is an issue we found, and this is how we would correct it. So it's like so you have variation in services. So on average, like ventures, they have one audit, but as you can see, it's very skewed. So once you pass like the 19th percentile, you do have some ventures that get multiple audits from a similar or different auditors, which is different from the financial side, where you get your financial statements audited once a year, and you don't seek audit or check on the per basis or on the per need basis. It's a little a little different. Okay, so something I want to spend a bit of time on is like, what are the services that are provided, and what we can do is like we can see, okay, who performs the audit, try to think of what kind of methodology they discuss, how much time it takes to complete the audit, and what information is contained in the report. Of course, not all of this is going to be disclosed on all the reports, because there's no regulation that says this is how you should format your smart contract audit report that shares your opinion. But the good news is, unlike for financial audits, where you just see like a clean opinion with half a page and the signature of the partner in charge of it, here we often have much longer reports that give us detail or insights into what were either the inputs and or the outputs of the process. Okay, so in terms of team size, most reports mention that a team perform the audits. They don't specify how many, and you see for some observations they say, okay, it's 1, 2, 3 auditors, but for most of them they mention a team, so a group work. Most of them don't give insight about their methodology, but conditional on giving information about the methodology. Typically, they mention that it's a combination of manual and automatic. So you try to launch the code to see what happens, and then you manually check some features and some function to go spot for specific issues, which seems to be the predominant way of doing that. Again, most audit reports do not mention the time spent. But for those who mention, it's typically either a day or a week of work. Like everything else is like very rare or very light frequency. So as you can see, there's like, the report is like on average 17 pages long. Maybe at the median it's more like 13 pages, which is 13 times longer than a typical audit report for financial statements. So that gives us information, again, a good way to look at like what they're actually doing, opening the black box, which is much harder to do for typical financial audits. So we looked at like the number of items checked and the number of issues that are found. We try to classify them between minor and major issues. This is a bit subjective here because some will have major or minor, some will have high, medium, and low. Some would have like 4 or 5 categories. So we have to come up with like, okay, a way to classify them and be and account for this heterogeneity. But it gives us some information that some company, there's a lot of variation in how many items they check and whether they find issues. And something that I really want to highlight is, so we found this top quality auditors on some websites asking, okay, like this is like, those are the main players, the more trustworthy players. And when we compare, what you see is that their reports are longer than for the highest quality, again, ranked by industry specialists. But what is super cool for us is that you do find more issues when you're a high quality auditor. So it's not that the high quality auditor match with the low quality ventures. Because typically the match goes the other way around, right? Like the high quality auditors are going to match with the high quality ventures that are going to use that as a signaling device, and the low quality or the low type firm is going to match with the low type audit services. And here it's really that the errors or the mistakes that are found and sometimes advised on how to iterate and clean them is a function of the effort. And if you think about financial statement audits, the auditor has a mandate to look at, when you get an engagement, you have to check the financial statements and issue an opinion. So in that sense, the scope of what you do is the same regardless of whether you hire PwC or Deloitte. You might think that one is more skilled or better works or cheaper and so on and so forth, but the scope is the same. Here, what's interesting is that the scope is different. So the one that are higher quality, they do have longer reports, they check more items, and then as a result of that, they find more issues. So I want to insist on that. Like, finding issues is not necessarily a bad thing. It means that there was enough groundwork done to actually check what are the potential problems in your underlying technologies on your smart contract and how to fix it. Okay, this is one other example of classification: critical, high, medium, and low in terms of. And here it's a two-dimensional instead of having a one-dimensional. It's on likelihood times impact. You know, something really rare, very bad that has a low probability is not so bad. So here, this is an example from Static. I realize that it's a little blurry, so I'm sorry, but you know, some companies, they don't tell you what's their input, but some audit firms, they put the list of their inputs on their report. So this is everything that we're going to check. We're going to check for reentrancy. We're going to check whether we think that the contract has some open door that allows, or some functions that allows for reentrancy attacks. So this is like the list of like 20 items in the CERTIC, in some of the CERTIC reports. Okay, so it's already 11:30, so let me rush quickly. I have just a couple more things to say. The last thing we do is we try to look at like whether there is value for these audits. And you know, the main challenge is, I told you we have 5,000 plus reports covering 4,000 plus ventures, but only half of them have liquid coins on which we got pricing data on CoinGecko. So we have to be very careful here, because there's huge selection as to who has liquid price, who gets an audit, and who chooses, because there might also be ventures that get an audit of their smart contract, but because it's not good, they choose not to report it. So we have multiple layers of selection. So those results have to be taken with a grain of salt. But nonetheless, we try to see whether there is any positive market reaction or no market reaction. That's just something. And again, you know, we don't know how the market will respond to some news. You know, if I tell you there is 3 major problems with your blockchain, that on the smart contract that you wrote on the Ethereum blockchain, this may be good news or this may be bad news, right? Because we really don't observe the priors of market of the people owning coins, right? If you think of a public firm in the US, you look at the analyst consensus for Apple, and when they release their earnings, you can pretty much say, well, this is above or below consensus, which is giving you the, you know, the beliefs in the market in general. Here, it's very hard because we don't really observe what they expect with respect to the quality of the technology of the coins. So anyway, so we use various benchmarks to calculate some market returns. Again, we only have 10% of the sample that is covered, which is a problem. But on average, what we find is that there is a positive market reaction around the times where the audit report is released. The effect is stronger when it's a single report, presumably, because if it's a single report, you're happy with the output as the firm. Whereas if you have to go for a second report, it means that there were some issues that you wanted to clean, between having someone else recheck again your technologies. Okay, we didn't find much results for what to compare whether there was an effect before or after getting an attack, but there was not much here. All right, so in the interest of having some time for Q&As, this is a very descriptive study on the emergence of smart contracts audits that, you know, unlike financial audits, can be iterative and provide help for internal decisions on how to improve the technology. For now, it's dominated by technical firms. That said, a couple of the auditors in our sample have been acquired by large accounting auditing firms. So it's unclear how the market is going to evolve in terms of structure. Are standards going to emerge, and who's going to continue providing those services? All right. Thank you very much.
All right. Thank you very much, Thomas, for a great presentation and being actually right on time. There are 2 questions that are in the Q&A, and I actually have a couple of my own. So I'll start with actually 3 questions. I'll start with the Q&A ones, and then, you know, if time permits, I'll ask a couple of questions myself. So the first one, can you identify in the data the audits commissioned by the underlying protocol or by a third party? And if so, is there a difference in results? I think they're mostly by the protocols themselves, right?
Yeah. They're always the one we have in DeFi. They're always with the protocol, so we don't. It's not initiated by the third party, or to our knowledge, we don't have. We don't have variation there. Now, of course, it could be that what we do not observe, the equilibrium we observe is there's a lot of financial audit of smart contract audits. What we don't know is whether the protocol starts with like, okay, we need to get our technology audited and they put it out, or whether there is some pressure by stakeholders saying, hey, if you want us to use your, let's say, lending platform, please get your check. So we observe this outcome. We don't know exactly where the initial demand for it came. Was it like internal of the firm, or was it external, or a combination of both? But that's a good point. We should caveat this and discuss it in the paper.
Yeah, I guess it relates also to the second question, right? What's the cost of audit?
That's an excellent question. I think I should have. I probably skipped it somewhere on the slides. That's a very good one. So it varies a lot. At some point, some of the very, I don't want to say low quality, but very fast audits were like saying that it's free to a couple $100. And then the larger ones, like, the one from Haken or Certic, like the one that are really top quality, if you look on blogs and if you go on their website, they say the price range is $5,000 to $15,000, right? And you can, I'll add a thing on this, like, of course, if you think of comparing with the audit fees of like a public firm, it's nothing, right? Like, just typically like a public firm in the US spends $1 million on tax advising a year. So that's really like a small amount, not even on their financial statements. But if you think from the perspective of the service provider, there's a very nice paper by Doug Skinner at the University of Chicago in accounting, and he looks at like the audit market in Australia. And of course, the audit firms, they start small with the venture they audit. But then if those ventures become the unicorn and the massive player in the economy, those firms grow with them by providing the service, right? So I think the bet for like a traditional accounting firm is say, oh, what if blockchain becomes a prominent technology in 5 years? If we don't invest when there is still some uncertainty as to whether it's going to become the mainstream technology, you might be left out and it's too late, because then you don't have the money to buy the auditors. They are the ones who's going to buy you out. So I think that's a very good point.
Yeah, totally. I actually thought, I mean, my impression was that, but yes.
Yeah, I'm trying to make a comment
Sorry.
very quickly on the previous question relating to whether the auditing reports are initiated by the firms or by a third party. Some of these firms, like TechRate, they actually initiated by themselves. So they started rating protocols unsolicited until they became a large player. Then it started providing the service. So a few of them started in the market by providing unsolicited reports.
Yeah.
It's like greenwashing by rating agencies, right? They do
right. Right.
Yeah. But I think what Daniel is right, that there is a lot of heterogeneity, right? Because the higher quality players, they typically existed before the smart contracts audits became something, and they were providing other services. And this was just a complementary service they could provide given the computer science and new IT skills they had in their company, and they expanded their portfolio. Because the larger one, like typically Certic, Haken, and so on, they are generalist firm in the sense that they provide, as I showed you on the slides, multiple ones. So yeah, but the origination of those companies varies. The scope of what the service they provide within smart contract audit varies, and the scope of what they do for outside. Some do just that, and some provide other type of services, which again is because we are right in the infancy of that market, which makes it interesting for us to study. But also this is clearly not the long-term equilibrium, right? There's going to be changing the service, changing the market structure, and so on.
Yeah. And actually, like in my experience, I think the cost of the audit can be quite high, right? So like for layer 1 protocols, it can reach a couple $100,000 for kind of significant audits.
Yeah.
Cool. So next question, we still have a couple of minutes. Do you have any perspectives on the future of smart contracts? Will they take over traditional contracts in terms of market share anytime soon?
That's hard to tell, right? Like if you look at the market value today, the answer will be probably not. But I'm not going to speculate, right? What I think what's interesting for me from a conceptual or an academic perspective is really understand, what are the problems? Because I think the benefits of decentralization are pretty clear. I think what we're working on or learning now is like, okay, what are the drawbacks, the costs, or the limitations? And the fact that you have no ex post recourse, there is an issue, is a real problem that makes this option looks weaker than, let's say, a market where you have to go through a broker and the broker is going to charge you fees and potentially scam you, right, or something like that. So I think looking at like thinking about that, and at the end understanding the trade-off, what's the net depending on the type of services that you get, is going to lead to be, okay, what is the technology that's going to dominate between like old style contracts and new type of like contracts through blockchains.
Yeah, cool. All right, there is a question about, or a comment rather, about the pricing, right? So the fact that CoinGecko API data has some survivorship bias, right? And there might be some issues related to the pricing data.
No, that is absolutely correct. So when we pull this in 2020. So remember, we pulled this in 2022. The most of the action in our sample is in 2021. So I hope that the survivorship bias is not too crazy, but hopefully we can try to get back at the data and assume that. Yeah, that's a good point.
Cool. And another question is, if there is any interplay between the availability of the code, so whether the project is open source and whether it's being audited.
That's a very good point. And actually, I haven't had time to talk about this in the presentation. So one issue we have is I don't have an Edgar server, right? So we don't have a clear set of the universe of all DeFi ventures or protocols at a given point in time. Let's just even in the cross section, right? So this is hard to do because there are. I don't have the full list of protocols that do not have their audits, and I also do not know I don't observe the one who got an audit and didn't release it. So I have a selection problem and we have a data access problem that makes it difficult. So I think those are the two. But that's an excellent point, actually. This is something we're going to make clear in our next draft. That's very good.
So that's a great. Can you hear me, Evgeny? Okay, I got a comment that my microphone was too low. So actually, I do examine that and using total value locked, not looking into price responses, and then using total value locked the protocols with open source code, they are more likely to audit. So there seems that there's some transparency effects on protocol level for undergoing an audit. So that's a very interesting question.
Yeah.
Thank you.
I actually have one question of my own. I'm not sure, Thomas, whether you're addressing it somewhere in the paper. So my question is about the evolution of auditing, for protocols that are audited multiple times, right? So basically, whether the auditing firms are auditing the same code, right? The same GitHub commit, or even the same smart contracts, right? It could be like core contracts or tokenomic smart contracts, right? So what's the relation in those audits, if you can see that?
Yeah. So we are coding it. We have not coded it yet. What I know is that if you get a second time, you're more likely to get a different auditor. So it's like 70% of the cases, the second audit is performed by a different firm. So now I don't know if I don't know yet if they are looking at the exact same set of contracts. I'm seeing if it's cleared or providing a different opinion, or if this is after an update. But I think this might be different depending on whether you get a new firm or the same firm to recheck something or something new. So probably this is something that we can code. That's a good point. Thanks, Evgeny. This is cool.
And one last kind of point is that when you analyze the market reaction, right? So the market reaction happens kind of later on, typically when the token of the project is already listed on some exchange, right?
Yeah.
And that's probably not the first audit, right? And so the actual market, the unobservable market reaction is probably larger, right? So because kind of the
no, that's a valid point. I think we have to be very clear on the selection, and probably we can see whether, because we have the date of those audits, so we could technically look at that, like, okay, what is the market reaction if you're listed and your first audit takes place after your price data is already available versus if it's the second or the third one. Yeah. So that's a good point. It's a good point. Thanks a lot. This is very helpful. All right, I'm going to mute myself.
All right. So Thomas, thank you very much for a fantastic presentation and Q&A.
Thank you very much.
Daniel, it's your turn. So it's Daniel Rabetti from NUS.
Yeah, sure. Let me just get rid of the floating panel, which always disturbs my presentation. Okay. Thank you very much for having me here. It's a pleasure. I've been many times on the other side watching the webinars, and now I'm here having the honor of presenting this very early paper, in which I'm really looking forward to comments on how we can improve that. And I totally agree with Thomas Bourveau that there are severe data issues and the market's information. So you should not take as a grain of salt some of the results and actually challenge that. I started this work about a year ago, and I cannot continue without sending some shout outs to my excellent team of RAs who has been working almost 24/7 in the last few weeks so that I could bring some new insights to this webinar. I would just briefly describe a little bit the market before starting. And of course, the DeFi market, boomed in 2021 around June and July. But early in that year, we started already seeing some vulnerability exploits, which resonated to the market that the smart contract coding needs assurance and a review process, which should be similar to what's already done with a formal verification in the software development process. Actually, that was a call by Vitalik from Ethereum in early 2019, saying, "Look, we are providing you guys here all the tools to develop smart contracts. Now, how you stylize the logic of these contracts and you go about it, that's up to you to make sure that you don't leave any vulnerability that outsiders can exploit and get billions of dollars in losses from your customers." And you're talking about here DeFi boom around $200 billion. During the same time, you see that a lot of firms start providing auditing services. However, there's the demand for that was so overwhelming that many of them have to actually reject a few of the projects that came to them asking for this. So this is a kind of the situation that we start our market, where in one hand the market needs assurance, some of the DeFi protocols are thriving. However, on the other hand, there's not much availability, search costs increases, and you are not sure about the quality of these auditors that are few. Most of them are new players in the market. Now, there's no doubt that there's a call from the regulators that about the crypto markets, especially when there's some new innovative product that happened during the initial coin offerings markets. Then same happened during the DeFi market, and especially the FBI, set some concerns related to vulnerability exploits that could leave losses to users. And one of the recommendations is actually that DeFi protocols should go through third-party examination or audit. So what I'm gonna do, I'm gonna describe a little bit about the market. I believe there's a lot of institutional background information that's helped us understand exactly who these players are. They're heterogeneity in quality and different processes, also different types of auditing. They're not limited only to code review. Of course, data, there's a severe issues for data that's scattered throughout the internet, and which leads to empirical challenges. However, I will take the challenge here of provide some initial empirical findings in two fronts. One, trying to understand a little bit the determinants of this auditing, why a DeFi protocol would undergo audit, and then what are the consequences for the protocols that do undergo audit. We will also try to figure out something or infer something from the quality of these auditors. So, we are currently sitting into, Evgeny said in the beginning of the webinar that the DeFi market is not going so well, but we've been kind of steady for some time, around $50 billion in total value locked, and with Ethereum being the chain that's most responsible for this activity, and actually the chain that holds most of the DeFi applications. DeFi, auditing started around being more executed around 2021. However, when you see at the end of 2021 at the orange bar, which are DeFi audits, and the blue bar, the total DeFi audits, this starts the discrepancy of audits that are being launched without code verified by auditors. And the reason this stands today around 1/3 of the DeFi protocols, they go live, they launch their smart contracts without being audited by a third party. One of the main reasons being the lack of auditing availability, and also a large heterogeneity on auditing quality, which we'll see later in this presentation. Now, auditing is not only about code review. Code review happens for the majority of the auditing process. However, there's also some innovations in the market where auditors are going for, instead of going for a centralized auditor, they goes to a decentralized auditing process that involves bounty hunters. It's essentially going to a web platform, and engineers or cybersecurity experts will essentially get paid by the number, by two factors. One, the number of vulnerabilities that they find in the smart contract coding, and the other one by how severe that vulnerability is. There's also formal verification, which is a process that entails static auditing, which is using some mathematical models or some automated applications to find the bugs. And there's, of course, a mix of these three. Now, what's interesting is that, this goes back to some point that was raised during our conversations, is if you look into the audit that happens before the protocol goes live, which is essentially the moment that's more important, because the DeFi protocol wants to make sure the smart contract is well functioning, is only about 1/3 of the DeFi protocols that actually conduct the auditing process before the DeFi protocol goes live. After the protocol goes live, though, that portion also is very small. About 20% of the DeFi protocols after go live, they actually conduct one audit, and then when you go up the number of audits, this portion becomes very small. So we're going to concentrate in this paper on the DeFi protocols that conduct the auditing before going live. Now there's more than 100 actually DeFi auditing firms in the market right now, and these are very, very recent figures, actually about 2 days ago. And we look into 7,000 projects. We see that Certic, Haken, and PackShield are one of the three most, let's say, popular auditing firms. Certic we're going to talk about it in a moment, it's one of the earliest that have been in the market, one of the largest. The reason why we're not include TechRate, because this TechRate actually started doing reports, unsolicited reports to the market, and not as opposed of the DeFi protocol team coming to the auditor and initiating the process. If you look into some different variables for success, for instance, launching the smart contract, obtaining a certain amount of total value locked within the first weeks of smart contract deployment, or even looking to other variables such as listing a token in a crypto exchange, then the vast majority of the DeFi projects that are audited, they are unsuccessful, they fail. So this is some interesting figures that tells a lot about the risks in this market. I'll go through a little bit faster with, I plan to describe the three main auditors in this market, but Thomas Bourveau has already talked a lot about Certic. I will just show a few things that I find interesting about Certic, is that it's actually headquartered in New York, and created by professors from Yale and Columbia University. So I did not search who these professors are, because I did not want to bias my analysis for this paper. But Certic has also very successful seed roundings with Sequoia, Lightspeed, and other investors here, including Goldman Sachs, Coinbase, and Binance. So Certic is indeed a differentiated player in this market. Interestingly, when you look into the web traffic for Certic, we see that at least in the last 3 months, there's a large portion coming from Poland, not from the United States. Well, this is a male-dominated market, 80%. There's some kind of interesting facts here, but I'll just go faster. Just keep in mind the total number of visits, daily visits, which is around 500,000 at Certic, with a bounce rate, which means that most of people leave the first page. Half of these people live on the first page. Now, the website for Certic is phenomenal. It's really, compared to the other websites, it looks very nice. There's a lot of information. For instance, you have for the audited DeFi protocols, the number of findings of vulnerabilities, their levels, critical, major, medium, minor, informational. You can download it. You can check the GitHub repository. So the website is quite informative. And here's an example of Certic auditing for 1H, which is a centralized exchange. You can see a summary of the findings, the labels for critical findings, major, medium, minor, and just information. Of course, they explain that in details in their report. Actually, their report is quite lengthy, on average more than 30 pages. Now, they also explain their approach and methods, and they provide a specific description of how this vulnerability is actually resolved or not. So we can see, it's not only about finding vulnerabilities. The auditors, they sit with the DeFi team, right? The engineers on the DeFi team, describe the issue, provide a recommendation, and then there's some resolution. Sometimes the DeFi team will actually resolve the problem. Sometimes we just acknowledge. So not all vulnerabilities that are pointed are actually resolved by the DeFi team. A second audit that you're going to look into is Haken, which is located in Estonia. It's a very popular auditor too. They actually have a Wikipedia page where they describe themselves as international cybersecurity company with Ukrainian roots that combats Russian cyber war. So these are clearly engineers coming with strong cybersecurity backgrounds. They are working with large players, an Avalanche, Kyber Network, KuCoin, and DAO Maker. Besides doing the code review, they also provide tokenomics and penetration tests and other types of services. If you compare the web traffic data of hacking to Certic and taking the web traffic as a kind of a proxy for demand, let's say a noisy proxy for demand, so you can see that the total visits is about 1/4 of Certic. The bounce rate is even higher. So many people who come to hacking looking for audit services, they will actually leave the page quite quickly. Well, the website is look ugly. There's not too much features like Certic, but actually they have a large clients in the DeFi space, such as Binance, Huobi, and DAO Maker, so on and so forth. Here's an example of the hacking report, which looks quite technical compared to Certic and less verbose. You can see some of they provide in a GitHub repository. For these reports, they put the part that corresponds to code reveal and separated part that looks to other analysis, tokenomics, functional review, so on and so forth. And then again, similar to Certic, they provide critical, high, medium, low, and whether these issues are actually resolved. Finally, PackShield, which is an increasingly popular auditor. They claim to be made by seasoned security professionals and senior researchers for companies such as Microsoft, Intel, and Alibaba. This is our Chinese player, and they, besides auditing, they also provide probably the only one that also provides blockchain forensic services, which is essentially mapping transactions on blockchain. They also have a tool for real-time blockchain monitoring. They have large clients, Binance, BNB, Chain, Polygon, EOS, Maker, IAV. You can see that some of these large clients, they actually overlap with different audit firms. And PackShield also likes to provide sorts of forensics reports, where you can see in Chinese, of course, located in China, and so on. Now, if you look into the web traffic data, they have a very small web traffic compared to the other websites. However, their bounce rate is it's way smaller, which means that people that come to PackShield, they're probably coming with a recommendation. They are intending actually to close deal with PackShield. PackShield also provides the reports on GitHub. On this aspect, seems to be a more engineering type of auditing firm. They have a very detailed reports with several types of classifications for their service provided, and then they part of provide similar treatment to whether severity has been resolved with the DeFi team. They also provide the codes on how that solution should be, or an example, a proof that what they found is indeed severe. Okay, so I'll jump a little bit to the process review. I just want to kind of make sure that we are on the same page. Some of this auditing process, they can take a very long time. So they could take in the back forth with the DeFi team weeks or even months. Some reports that came out and with the DeFi, boom, they took over 4 months to be actually released to the public. So that could be a very lengthy process. Surprisingly, when looking to more than 7,000 audit reports and more than 100, let's call them centralized auditing firms, there's a large variation in quality. We can perceive that the frequency for reports that does not find any issue is quite high. This is about 70% of the total reports, which is very surprisingly that there's no issues in a report, which raised two questions: whether this is a quality assurance processing, are they indeed verifying seriously the coding and make sure that the smart contract works as it's supposed to, or this is just signaling, right? They're just sending some reports so that the DeFi protocol can show that it has conducted, in quotes, a true trustworthy auditing process. So it's a very opaque process with many disclaimers. They're all showing soon, and a very funny disclaimer that we'll see what they put on there. Now, if you focus on the largest, or let's say the most popular auditing firms, Certic, Hacking, PackShield, Certic in New York, Hacking in Estonia, PackShield in China, then you can see a variation in the length of their pages, with Certic being quite verbose. Now, the numbers of reports, the percentage of reports that finds no critical issues is above 90% for Certic, and around that mark for the other top two, compared to their kind of on the average. So this is surprising that there's not critical issues found as much. So on average, auditing report has no critical issues, has no major issues. Has only, on an average, it has medium, low, and informational issues. Suite reports are reports that have 0 issues found, and quite substantial for Certic. Also, if you look into the average detected vulnerabilities for Certic, only 1/3 of it are essentially resolved by the DeFi team. Now, it could be that the DeFi team is actually thinking these issues are inconsequential. That could be one. Could be lower quality. Could it be bug stuffing? So we don't know exactly. But this is one bad signal that the DeFi protocol teams are not taking seriously the issues that are being raised in their auditing reports. This mark is a little bit higher for Hacking and PackShield. It could maybe be an indicator of quality or heterogeneity in the quality of these auditing reports. If you look into Bounty Hunters, which is this centralized platform that you have engineers for hire, and the engineers that are hired only get paid if they find severe vulnerabilities, so that how they can increase their payment. And Evgeny was right that he said, depending on the platform, some of the figures could be up to $100,000. So we see that information on these platforms. The number of reporters that has not found major issues is way lower when compared to the others. So there's a clear different incentives from some of these auditing firms. They may have incentives just to provide an audited certification without indeed doing a trustworthy job, while these engineers, they are paid only if they find those critical issues, and consequently they have more detected issues and a higher portion of issues resolved. About the disclaimers, one interesting disclaimer from one of these firms is, while we have done our best in conducting our analysis and producing this report, it is important to note that you should not rely on this report It cannot claim against us on the basis of what it says or doesn't say, or how we produce it. And it's important for you to conduct your own independent investigation. So essentially, what's the value of the report after all these disclaimers? Of course, there's other issues, which pertain to crypto in general, the absence of regulation in some jurisdictions, so on and so forth. But here, different from a regular auditors, there is no, they're not liable if after a protocol being audited is actually hacked. Here is an example of this. Decentralized code review, which is a platform that you can get people and they get paid by the amount of critical issues they find. On average, this payments will be around $100,000, a little bit less or a little bit more, and they have a duration of 7 days. So you can actually check, and different from the centralized auditors like Certic, Hacking, and PackShield. Here we can actually know ex ante what's the quality of this engineer, because they all have rankings, they all have the amount of risks that they found in past reports. We can also see the project that they work at. They have some some medals for finding some important issues, so on and so forth. So here you can ex ante verify the quality of the engineers that will audit your project. So there's severe data issues. Audit reporting data is highly fragmented across the web. Main aggregators provide partial coverage. Rogue information includes services like ratings from TechRate, for instance, and that are not real auditing. 1/3 of the entries of the main audit database, DeFi, misses audit information, especially on main auditors. There are funny mistakes throughout. Duplicated reports, switched auditors, empty files, wrong dates, so on and so forth. It is keep growing. I got my RAs always coming up to me with some funny examples. So we laugh about this. Audit firms, on the other hand, if you get data from audit firms straight away, some of them actually withdraw reports from problematic protocols. So we've seen cases of protocols that have been hacked. We know the name of the audit firm, we cannot find the audit report. So of course, there are some implications with erroneous inferences. That's very similar to issues we observed when we worked in the initial coin offers setting. And again, if you look into some market data to conduct the research, such as volume, transaction, price information, then essentially the analysis will be biased by selection of winners, right? Because this is a poll of survivors, or those that mostly successfully either listed a token or actually achieved some substantial amount on total value locked, as using that as a proxy for economic activity. So for this paper, we're going to focus on total value locked, which is a measure that's not conditional to token listing. It's less likely to be exposed to survival bias, and because it would include even protocols that fail on the long run. So let's describe a little bit some determinants. Of course, here is being quite ambitious in absence of theory for these determinants. So take that as a grain of salt. There's a lot of unobserved factors, such as the smart contract coding quality at the moment of the auditing process, or the auditor's expertise in certain chains or industries, which we try to control for in the cross-section, but also some unobserved search costs for DeFi protocols and auditors' availability. So some of the things that we do here, we look into how using the responsive variable as being audited. Again, we are looking all audits that happen. All this data is before the audit has been conducted. So, for instance, here we're looking to lagged Ethereum market capitalization. Interestingly, this is negative. So, an increase in during the bull market, you're going to see less audits, but this is again issue related to auditors' availability. We're going to also see some intuitive measures. We include the raise, whether protocol has raised the pre-seeds or early raising fund stages. That's more likely to conduct audited. Of course, we have some resources here in hand. The adoption of oracles introduces an additional layer of risk here, especially, some cases we've seen on the flash loans, for instance, and exploit some single points of failure. They are also more likely to conduct the audit. There was a question in the chat box about having an open source. Yes, that is highly correlates with the likelihood of conducting audit. We could see something about the protocol being transparent or actually trying to signal that transparency or that better quality to the market. And the list goes on. We had some risk industries. If you look into some specific clusters of DeFi protocols and derivatives, lending options, yield farming, they're more likely to conduct auditing than the other industries. Young firms will be less likely, and actually I was looking to what could motivate it. Is it because most of the DeFi protocols are on Ethereum or some competition issue? But I've seen recently some anecdotes coming from interviews or survey with CEOs or the managers of these auditing firms. A few of them claim that it's very hard to find an auditor or an engineer with expertise for programming languages that are not Solidity. So a difficulty here is actually on the new chains or young chains is to find experienced auditors. So we move now for best attempt to find some implications of auditing on this DeFi protocol. So we're gonna look here. Economic activities are gonna be in this specification is total value locked, and you're gonna see the changes between the first day that the protocol goes live, and the first week, and then the first month and quarter, and whether DeFi protocol has been audited or not. So here you see the differences. So on average, audited protocols will have an enhanced growth on about 37% in the first week, 77% in the first month, and 93% in the first quarter. So they do have a meaningful and significant positive impact on their path of economic activities using total value locked to measure that. And this is, after using industry fixed effects, blockchain fixed effects, Oracle fixed effects, and a few variables that are correlated with the likelihood of being audited. Now, may some of you want to see that in levels, so you're going to have the same specification with the log of total value locked in levels. You see also the coefficient is positive and growing, which consistent with the specification it changes. Now, an interesting question is, what is driving this growth? Is it because it's audited effect? It can be that the audit is affecting long-term paths for these DeFi protocols that perhaps coming from a channel. What is this economic channel then? So here we look into how audited is affecting on the user base or the number of users holding at least one token on this DeFi protocols. Of course, this is it's a limited analysis as you have conditional on-chain protocols that have on-chain data. But again, that could be a potential. The user base is actually experiencing not experiencing issue due to smart contract failures or any vulnerability that's on those smart contracts. And if so, compared to the other protocols that perhaps are having more issues, then they are motivating this growth in total value locked. Now, what I do is we look into the intensive margin here to see whether there's a variation across auditors or whether they have different implications compared to the average auditing effect. And you can see that some of them, like Sardic, they are actually below average. And this is 1 month total value locked measure compared to the other counterparties that the top 3 here. Pax should have been a little bit better than the average, and the Bonto is having a way better than average. That could actually be some kind of post auditing realization of auditor quality. But one question could be, why is it negative? Is it because of some of these protocols actually are facing vulnerability issues? And so this is very important to be analyzed. So what you're going to do next is this negative impact to total value locked being driven by vulnerabilities or by hacks or something that's happened to those smart contracts? So I had to give a very brief introduction because I think I have about 5 minutes at most. So cybersecurity in the DeFi markets on the rise. We have several issues with cybersecurity breaches, especially in 2021 and growing. This is about $7.6 billion in security exploits. About 2/3 of the hacked DeFi protocols that they have experienced some type of security exploits, they were actually audited. Of course, I'm omitting the name of the auditing firms here, as I don't want to get any issue or appear that I'm marketing for a particular firm. But it seems, at least on this table, that there's some auditing perhaps is not preventing these protocols of being hacked. Once the protocol is hacked, this is when the DeFi team is actually realizing the quality of the auditing reports, right? Because if they sat with the auditors and worked through the codes and did the recommendations, and then the smart contract is hacked, they realize their auditor was not the best choice. So when that happens, is the realization of quality. Very interestingly, the top 3, which was not even the top 1 in the market, actually absorbs the changes in the auditor choice post-hack event. So these protocols have one auditor, they are hacked, they realize the quality is bad, they switch to a potential better auditor after the hack. It's not only about changing or switching the auditor, it's also switching the method. So you can see here that Bounty Hunters is actually accommodating large portion of the protocols that have been hacked. And also formal verification is increasing, and a few new players providing better services also appear. Finally, we're gonna look into some of our main players here, how they being auditing with them, whether that prevents being hacked. This, the specification is having a protocol being hacked. On average, audited protocols, they are more hacked than non-audited protocols. Well, this could be explained by that these audits are often occurring in protocols that are more riskier, or there's a perception that it could be expected to be more vulnerable. However, when you look into the top 1, the top 2, and the top 3, the audited protocols, whether the likelihood of being hacked, we don't see any differences from the first effect that we see here. So it seems that even when you are auditing with the top 2 auditors of this market, that's not preventing your smart contract being hacked. Only one of them is actually having a positive impact on that, which means you're less likely to be hacked if you're following your auditing procedure with that particular protocol. So there's some variation in the quality that you can observe here when these protocols are being hacked. So just to conclude, few takeaways. The market for DeFi auditing is growing fast. A few auditors dominate the market in terms of number of audits and the total value secured. Audits protocols, economic growth, likely driven by an expanding user base. However, DeFi protocols face high asymmetric information regarding auditors' quality. Audits are often of low quality. They fail to find critical issues or are ignored by the DeFi protocol team. Auditing does not prevent security breaches, except with a few seemingly high-quality auditors, and DeFi protocols often switch auditors after a security breach occurs. So there's a call here for standardization in the auditing process, a responsibility sharing and increasing transparency. Some insights of this study may be helpful for market players, including regulators. Thank you very much for the opportunity.
Thank you very much, Daniel, for a great presentation. So there are a couple of questions from the audience. We'll go over them now, and at that point, I'm going to basically open the floor to questions to both Daniel and Thomas, right? And you can just raise your hand, and I'll allow you to speak, right? But let's first go over the questions that are there right now. So what are your thoughts on the lack of significance of the open source variable in some models and significance in other models? And actually, I'll add a question of my own to this, right? So smart contracts, right, they're by definition open source, right? Otherwise, you won't be able to interact with them. So what are the kind of the contracts that are not open source that, what is the distinction?
Sure, I think the specification here is maybe about semantics. But the specification here on open source that I'm using in the study refers to whether a DeFi protocol has a GitHub repository, right? We could differ from having a smart contract running on Solidity, which that could be essentially what you would be looking for, right? That specification can actually be used in a future iteration of the paper, and I think probably would do a good discussion on that front. Relating to the question that has been raised, I'm not sure exactly in which tables it refers, but I can look into it. On the probably on the determinants is a different specification where we're looking to open source, and how that affects the decision of auditing. That's highly significant, but again, you should take that as a grain of salt. It's the determinants of auditing in absence of theory of any other motivation is a little bit blurry. So that's more of an empirical test and a curiosity than actually something that we should take too serious about. But yes, I'll probably look into what you suggested. I think that would be very interesting to have in the paper.
All right, and so the next question is about the fact that a lot of protocols are forks of other protocols, right? So for a small change in the code or no change in the code and deployment of the protocol under the new name. So like in the DEX space, there are probably hundreds of forks of Uniswap v2 and dozens of forks of Uniswap v3. And
sure.
That probably affects the number of issues, right? So if you're kind of copying already audited code, the number of issues might be different. The question is, I guess, whether there are ways to see it and address it in the data.
Possibly, we'll definitely look into it. That would probably affect more of a layer one, I would assume, than the auditing reports that we have for small protocols. Perhaps we had to look into it more seriously. I think this is a great suggestion that we could definitely incorporate in future iterations.
Cool. All right. Let's see. Okay, so there is large differences in the number of hacks by protocol type. So, for example, bridges are kind of the type or the area where most hacks occurs, and that's definitely true.
Sure.
Yeah. So whether there is any control for that.
So I do have that. It's not on actually on these tables. We do have the protocol type, and even the vector of attack would be also interesting to see, because there are different vectors of attack. That's definitely coming up for the next iteration of the paper. We will discuss more. These results on the hacking, they are quite new, so we are not that ambitious right now, but definitely a front that we push into, because I realized that this is when the auditor quality matters, or when the auditing quality realized, right? So ex ante, you don't have, you are not sure whether you're being secured by a good auditor, but then if it's hacked, then this when the realization comes. So definitely working more on that front in the next iteration. That's a great comment. Thank you very much.
Excellent. All right, we have a few minutes left, so if you want to, to ask more questions to either Thomas, who is supposed to leave in 3 minutes, so that's your last chance, or Daniel, please do. You can just raise your hand and voice your question, or write them in the quick Q&A box.
Also, if you have questions you want to send later by email or suggestions, we really welcome, as this work is very early. So that's the moment to make the difference.
All right. So if there are no further questions, I think this was a fantastic session. I personally learned a lot, and I'm sure that many others did as well. So and I'm sure we'll learn more as this work progresses. Super important topic and timely one. So thank you very much, Thomas and Daniel. It was a pleasure, and hope to see all of you in future weeks. Thank you.
Thank you.
And thank you.
Bye bye. Thank you.